Let's welcome in our next guest then. Gautam Shah, founder of Goldilocks Global Research, is with us now. Gautam, thank you so much for joining in. Hope you had a cracker of a Diwali. Season's greetings to you. The market actually had a pretty good Diwali as well. But the question is back, now what? Now that we're almost at the doorsteps of the previous all-time high. I know in our past conversations, you sounded really optimistic. But what do you make of the overall setup at the moment?
Good morning, Surabhi. I don't think many people would have thought that by the end of October, we'll be close to lifetime highs, and that's what markets can do. And I think the real test of the market is always how it reacts to difficult news flow. And I think in the last couple of months, we had a lot of difficult news flow locally and globally, but the market kept respecting support levels. I think the point that I mentioned in my last interaction. And now as we speak, this move of the last 1 week, I think just has too much ammunition on the charts and tells me that this is genuine. We have indeed seen a sort of a breakout. The news flow has got supportive. The breadth is getting better. The top 100 has done a lot better. We have banks, IT, Reliance, all trying to come back at the same time. So yesterday, I think morning was slightly overly celebrated, I would say, and therefore we've seen some profit taking, but I think this is just temporary. All dips should get bought into, and I think the markets are headed for new lifetime highs and beyond. On the Nifty, I think 26,700 is our next stopover number just for the near term. But from a medium-term perspective, we stay positioned for levels of 27,500. So I think one should just ride this move. Do not overanalyze. I think the news flow is getting better. The charts are already very, very good. And I think the risk-reward to enter longs, even at current levels, I think is quite lucrative.
Okay, good to see you in, Gautam. You're sounding a little bit bullish, so that's good news. And you have been saying, right, when the market chooses to look past bad news, that's the first signal that, it wants to climb the wall of worry. A couple of questions here. 27,500, I think that's the target that you have ultimately on the Nifty. What's the timeline for this target? And when does this bullish bias get negated? On the downside, what's the level you would not like to see breaking first on the Nifty?
See, a couple of points. We are coming out of a period of no return for over a year. And in this period, obviously, the government and the RBI has done a lot to propel the Indian markets and the economy higher, which I think was a very strong foundation that was laid. And secondly, in the last 3 months, we've really behaved like a pendulum, oscillating within a large band. So keeping that in mind, 25,300, 25,400 now becomes a very important support. Till this level stays, I want to believe that the market is headed higher. And we will make a sequence of higher tops and higher bottoms. When you are near lifetime highs, you don't want to focus too much on targets. You just want to focus on supports. But I do believe that between now and say January, we could be getting closer and closer to that 27,500 number. But let's not forget, in these last 10 days, it's just the top 100 that has done well. The small cap index has been absolutely flat. Mid caps have actually underperformed. So I'm batting for the comeback of broader markets in the next 1 week. And if that happens, people will start feeling the strength in their portfolios, which is currently actually not the case.
All right, that's the important part, Gautam, because yesterday, after all the euphoria and all that excitement over the last few days, people were saying, markets are going on saying it's going to fresh all-time highs, and my portfolio is not feeling like that. So it'll be good to see broader market participation, because when the broader market participates, that's what makes your portfolio feel good. Tell us if you have any kind of levels on the mid as well as the small cap indices, and if you want to throw in a couple of stocks as well.
See, the mid-cap index, as we speak, is flirting with that level of 60,000, which has been a problem level for the last 6 months. And I think once that level of 60,000 is cleared, I wouldn't be surprised if you see a 3,500 point move there. So I think that would be special as and when it happens. And I think we've done a lot of hard work around this level of 60,000. On the small cap index, I think 18,200, I think, is the critical number. Once that is taken out, I'm looking at a move towards a level of 20,000, which is near the previous high or near lifetime highs. So sustenance above 18,200 on the small cap index, I think, is something that should lead to greater strength. But the last 10 days, everybody is speaking about FI selling and the long short position that they have been keeping for a while now. With top 100 making such a strong comeback, with IT making a comeback, with banks doing so well, I just get the feel that now domestic money and some foreign support could actually propel the market higher from here.
Okay, so that's on some of the leadership sectors. So where should one be, within financials, Gautam? That's the question. There's so much happening. There's so many deals happening. I mean, we just saw the federal deal get announced this morning. So there's a lot of news and a lot of noise as well within the financial space. So what looks good?
Well, honestly, we like everything. I think one can just buy the basket, one can buy the ETF. I think valuations are comfortable, charts are excellent, relative strength is immense. And I think banking has been single-handedly responsible for the kind of strength the markets have seen in the last 10 days. So I think our working target for the Bank Nifty has been about 60,000. We've been maintaining it for over a year now. I think we will get there soon, and I think we will even get past it. Because when I look at the placement of some of the top banking stocks, including the NBFCs, and some of the top NBFCs have been our favorite for a very long period of time, I think you're going to see a lot more strength. But I think the key space within banking and financial services, which I think is going to be the key highlight, is PSU banks. I think I like the top 3 or 4 PSU banks, and I think they're going to register stellar returns over the next 6 to 12 months.
All right, Gautam, let's take a break from the equity markets. What's the view on gold? Gold and silver. All that glitters in the last year was gold and silver. What are the charts telling you on both those two?
Well, we've been advising aggressive profit booking over the last 1 week. I think for the last 1.5 years, I think we've been very, very bullish on both of them. Pretty much spoke about it in every interaction of ours. But in the last 7 days, we felt that they had come to a point where the rise was parabolic. And we felt that a lot of the positives are in the price. And we also did see a lot of madness on the screen and on the charts. So I think they're going to take a bit of a cool off, maybe correct by about 10, 12, 15%, which is quite normal in the overall scheme of things. So for the time being, I think the gold and silver rally is done with. Probably even the Bitcoin rally is done with, because there are some indications of topping out. And I think the focus is going to go back into equities. So I think equities is where the bigger opportunity could be over the next 6 to 12 months. But don't get me wrong, I remain positive on gold and silver if somebody is taking a 3-year view. But if you're taking a 3 to 6 month view, these might not be good levels to add.
Okay. So we were talking about the engines that will turbocharge this market higher. One is financials. You're pretty convinced there. What else, Gautam? What else looks good?
Well, I generally don't change my sector preferences, and I think my sector preference is still metals. I think I really like the way the entire basket is shaping up. Today, you are seeing what's happened to aluminum. We've seen what happened to copper in the recent past. I think some of these charts are incredible. Valuations are very comfortable for many of these companies. I think they're under-owned. People are still not being able to make a case fundamentally. And given the positive talk with the US, I think there is a feeling that there could be a very large trend in metals on an overall basis. I mean, top metal stocks could appreciate 20-25% in a matter of 6 months is what I feel. And I think we've already kickstarted that. So metals is one space that we like. Auto we like, power and infra we like, the entire PSU bank and the entire PSE space we like, and financials we like. So these are the 5 or 6 buckets where I think capital should be committed into.
All right. Anything that's not looking good?
Well, there are too many stocks and too many sectors that have not performed in the recent past. And I think this is a market where you should ignore stocks that don't move with the Nifty. For me, in my book, FMCG, IT and pharma is still an avoid. I don't see any trend there, and I think one should just stay away.
Okay, all right. And, you briefly mentioned about Reliance Industries. Now, that's like an index by itself, right? When the big boy does well, the Nifty has got legs then to move up. So Reliance Industries, after that brief correction, it seems to be coming back into form. What are the levels you're seeking on that one?
Well, I don't have a specific view, and I do believe that the energy space, including Reliance, is going to continue to underperform. The fact that it's not falling itself is a very positive sign. I think it's going to be in a band of about 200 rupees, maybe 1400 downside, 1600 upside. But because it's such a big heavyweight, if it doesn't fall, that itself helps the Nifty. And now with IT making a comeback and banks looking good and capital goods, stocks like L&T making a comeback, I believe that's very, very favorable for the overall market.
Okay. All right, got that. By the way, I just want to point out that there's a lot of pressure on lever this morning. Not that there are any major downgrades or any big sell calls, not that I could spot one. But I think the market's just pricing in the reality that the company is going to be squarely focused on volume growth now, not so much on price. And that's what the new CEO outlined very, very clearly in the interaction post the results release yesterday. So that one's under very clear pressure.
Well, and the market believes that the deal coming should be, because the barometer normally is this Gokuldas exports, the stock. Yesterday, the stock was buzzing up. Today, in the first few minutes of trade itself, they're bidding the stock up. So hopefully the deal does come about, but that's normally been the barometer. When you get the positive sound bites coming in from Mr. Trump, then you have the stock that's up. And when he says, he's not impressed, etc., all that, sort of commentary that comes in, then the stock is under pressure. So for today, it appears that the market believes that we are closer to the deal. Let's hope that they're right, because the stock has been bid up considerably as well. Gautam, one worry, which hasn't been a worry of late, has been crude. Crude has been very, very well behaved. And you're mentioning that, the energy basket itself, maybe it underperforms a little bit. What's your view on crude oil prices? Even when geopolitical tensions come up, it couldn't get past even $75 a barrel. And that too, it held there just for a couple of days. Your view on Brent?
Typically economists start worrying about crude when it goes up too much or it goes down too much. I think that's really the debate that keeps coming in. But I think 55 to 75 on the NYMEX crude is pretty much the range. I'm very clear that it is in a downward bias. It will remain under pressure. If 55 levels were to get broken on NYMEX crude, then I think we are looking at some sort of a concern. But I think it's right now it's in a space where you don't look at it too much, and I don't think it's going to impact equity markets. So as I said, only below 55 or above 75, would there be a concern, or would there be any correlation with equity markets?
Okay, so as of now, not much of a concern. Gautam, what about global markets? Do you see anything different, anything changing? There's so many times that people have questioned this AI trade, but it continues to be as strong as ever. And how do you see the correlation playing between the US market and the India market? Because the former has outperformed in a big way in the last 12 months.
Well, I think the AI trade is here to stay. I think it's changing and disrupting our lives as we speak. And I don't think the markets have discounted it completely. But the sad part is US and China are pretty much two countries or economies which are right at the forefront of the AI trade. And I think India is way behind in that particular trade. And that's probably the reason Indian markets have not done as well. So US and China, we continue to be positive. US, I think, is looking slightly toppish in terms of large caps. So it might take a bit of a breather. But the overall global landscape for equity markets continues to be positive. But I've been maintaining this for the last 6 months. I think the next big trade, after gold and silver, is really China and Hong Kong. So I do believe that those two markets will do exceedingly well over the next 6 to 12 months and could beat every single equity market over the next, many quarters. India will do well, but it will find it very difficult, to beat returns of other markets in the world. And that's probably the reason you need to be in the small caps and mid caps for outperforming.
Always a pleasure speaking to you, Gautam. Wishing you a good day ahead, and we look forward to chatting up with you. You made some very, very relevant points, and you're sounding very optimistic on the markets as well. So happy Friday to you. We'll chat with you rather soon.
Thank you, Ranjan. See you.